All right, everybody. Really excited tonight. We are here. We're going to be going over a 40-unit deal that I'm really excited about. We have some great info. But right before we jump into the deal, I just want to share one win tonight, and that's it. We just were in Kansas City, and we were there for I was there for about 5 days. Oh, great. He changed it. And this is our team. This is something I am extremely proud about because I ran a restaurant for 25 years, my own restaurant with me, my father, my brother, and my mother, and me, my dad, and mom and brother. We did all the hiring. And I've built businesses besides that one. I built another restaurant for another person. And I have total of 5 companies right now that I sold a restaurant. And one of the hardest things is building a family team. And at my restaurant, I was able to retain my 5 main cooks, one of my main manager waitresses, Mary, who she had 3 kids, single mother, raised 3 kids with my restaurant. She was with me 25 years. She now works in Disney, and I still visit her. I spent 25 years with her. And this picture right here is I'm trying to replicate what we did at my restaurant, is building a family team that's going to be with us 10, 20 years. And yes, you're going to have people leave and get fired and quit, but our core right now is we have a strong, strong core. Josh Stahl's on this call tonight, and Josh said hello right real quick. I brought Josh in from my mastermind. He is a big part of the team. I brought Isaac from our mastermind. He's a district right now. He's the head. We have so many amazing people on the team, as you see in this picture. Chris is going to elaborate. In the 5 days, I visited all 15, 16 of my properties. I did some social media stuff. I spent time with the team. I work on leasing. I help fill units with Nick. I work on the marketing. I work on building the team. I work on building this picture so that we can self-manage. And Sharpline's advantage is self-managing. So I'm going to tell you right now what we teach in the mastermind. Third party is not the way to go. If you're investing in deals with third party, that's good. You could be successful. Self-management is the way. That's what we say. So in saying this, this win, I'm going to let Chris take it over. And Chris, I want you to add a couple things of your thoughts. And
Sure.
it was just such a powerful, exciting, great weekend. And I love the challenge of building good businesses with hiring good people. And Josh, though, I gotta give credit. We brought Josh in. Josh is doing an amazing job supporting us and doing his job and bringing in really good people and helping Chris so that me and Chris can really build the company. So Chris, please take over.
Yeah, I mean, for those of us that don't know us, Sharpline Communities is our property management arm that we self-manage. And self-management is not easy. We've been doing this for a while, but we started to self-manage about 2 years ago. And this robust team that is now growing is the result of 2 years of owning our property management company and getting better and better. At this point, we self-manage basically our entire portfolio of a little over 1,200 units. We've seen the positive benefits of self-management and control of expenses, flexibility. You can pivot very quickly, and if the market does something to you, you can change a business plan very quickly. And we're hiring the best. Like we are definitely attracting some of the best and brightest in the industry, and we're going to keep on doing that. But self-management is about people. So these people care about their job and fiduciary of your capital, as do we. So they understand what's at stake here, and they take it in their DNA. So this is our holiday party. It was great to get together. We flew people in from all over the country to be together. And don't worry, investors, that was on our dime. Don't worry, we did it. It was our dime. We did it. But it was great to get everybody together so that they could meet each other. We have our Slack and everything, that there's like an online community, but face-to-face is the best when a lot of these people that are rising up through the company are training each other and really elevating and encouraging everybody to be the best, because that's what we are. So let's move on. All right, so we didn't do that many deals this year in comparison to our prior years of 6 or 7 deals in a year. We held back a little bit because the market got a little weird, and that was good. We concentrated on operations, and that was that's proven to be very advantageous for our investors and ourselves to fortify. We did close 2, though. In the beginning of the year, we did close a 62 unit in Lawrence. That was a B class. That is distributing. We got another 72 unit A class for like 127 a unit. Can you believe that? It was the sister 72 unit that we purchased 2 years ago in the Springfield market, a 2020 built that is doing quite well. And yeah, we just purchased it, took it over, self-managed about a month and a half ago, 2 months ago, and it's doing great. So these were what we closed this year. It was a slow year for Sharpline, even though it was quite busy on the property management side. But this is what we had going on. Nick, you can go to the next slide. We're going to do this real quick. A lot of people know us already. When you go in the portal, you can see this presentation. You can see our history here. I mean, I was an ex-tech guy for a long time, tech executive, transitioned many years ago. Krista and I have been partners for over 8 years now. Yeah, I mean, we've done full cycles, purchase, refinance, sell. So we've gone through it all. Basically, it's just a little quick thing. We know what we're doing. We're not the Facebook idiots. So while we are on Facebook and sometimes we act idiotic, we're not Facebook idiots that you see out there.
Speak for yourself, Chris. I'm not on Facebook that much. I'm not a Facebook idiot.
Go ahead, Krista. My partner Krista has many years.
Many very Reader's Digest version, guys. I am my past life I was an attorney. I didn't enjoy that very much. No offense to the attorneys on the call. I jumped into real estate in 2009. I started flipping single families with my husband. Decided I needed to scale the business, to, got a mentor to coach me in 2011, got into the multifamily business, met Chris in 2015 through that same mentorship program. We formed Sharpline Equity in 2016, and here we are. Back to you, Chris.
All right. Yeah, so basically we know what we're doing. Marco, go ahead. This is a great time for you to talk about our families.
Yeah, so real quick introduction. Just for people who say, like, why do we like multifamily? I'm going to tell you right now why we like multifamily. This will be my 44th multifamily deal. I have 28 generational wealth, and which are going to my kids. I'm never selling. And 16, this will be my 16th syndication. I have over 3,700 units, over 350 million in holdings. I will get to $1 billion in holdings. My goal is to get to 60 deals and then probably 70 or 80 deals. It's all for my kids. It's not for me. Up to deal 15 was for me to achieve what I need to achieve to sell my restaurant and do multifamily full time. And basically, I'm in charge right now of not in charge. I work with Nick Dominich, Chris's nephew, and we are heading the leasing, the marketing of Sharpline. And I work with Josh hand in hand and Chris, and we're building the property management company. I'm bringing my restaurant building skills to help this company and just move forward. And one really great thing is my 19, 15, and 11-year-old are investing in this deal. They empty their bank accounts from birthdays, communions, all that stuff, and they're going to be putting about $10,000 each in this deal. And going forward, they're working and they need to make money. And every deal I do, they put my 19-year-old invested in a generational deal with me last time also. So my 19-year-old has more multifamily than some of my friends. So if you ask me, how do I feel about multifamily? That's how I feel about multifamily. I invest in crypto and stocks, which is fake paper, but I like wood and brick, something tangible. I like to buy real assets. So with a real good team, that's and combined. So in short, that's it. So go ahead, Chris. Please take it over.
Yeah, go ahead, Nick. We'll get right into it. All right, so this is the deal. We put out feelers on this one right in the middle of the summer. We knew we were closing on that 72 unit A class. We like Springfield a lot. We knew we were taking over self-management of it. So we were optimistic. And this actually is a quasi direct to seller. We put out feelers and basically through a network of people knowing that we were looking to buy, that this seller, who this is his last build that he did, he went into the 55 plus asset class, reached out to his broker and said, well, we know Sharpline's buying in the area. So they contacted us and they know that we come through and we're buyers in this crazy market that is hard to get really good debt. You have to know what you're doing when you're dealing with debt, and equity is not easy to come by either. So it was the right time and we negotiated, got an amazing price. So this is kind of a direct to seller, if you will. It's definitely off market. I know people say that off market and then it's not really off market. If anything, this is truly off market. It's 2016 built. It's right in the walking distance of downtown Springfield. If you go to the west on that where you're looking at the right picture, you walk right to the bars over there. So it's in walking distance. 40 unit A class, great unit mix. And we have 200. With this we'll have 260 units. Just a really nice looking building. It presents well, and these SOL signs that you see are all visible from all varying driving directions, so you have great advertising as well. Go ahead, Nick. All right, so basically this is a 506B offering, which means that you got to know us. If you don't know us, got to get market to know us before you can invest. You don't have to be accredited investor on this one, but if you're not an accredited investor, you do have to have a pre-existing relationship with us. This is going to be monthly distributions, average 7% cash on cash, like all that stuff, 7% preferred, which means that you guys make 7% before we make anything in the project timeline. So if the project has to make 7% every year before we make money, essentially. We think it's going to be 1.9 equity multiple, which pretty much means you double your money in approximately 6 years. The property does cash flow right away because of something interesting that I'll get into later, but there is a full tax abatement on this for 3 years. So that's why we're able to start distributions right away. But even though it's distributions or cash flow right away, we are going to wait for 6 months. We have learned that it's better to see the pattern of a property to see how it breathes. Are there any surprises? Feel the rhythms of the property, and then we'll start distributing. Most likely we'll be refining in the probably about month 13 to month 17, and it is projected with about approximately a 7% rate at refi. I think we're going to do better than that. We're starting to see some bond yields come down, but let's just paint the picture in case it's 7% at refi. But that's what all these numbers are based upon. The property is great. It's got balconies. One of the things you're going to notice, I'm going to get into it in a bit, but like this is the interior and it looks great, but this is where the upside is going to come in. So let's go to the next slide. All right. So once again, the property, you got awesome unit mix. It's basically a nice spread between 1, 2, and 3 bedroom lofts, which is great. The current average rent is really low for downtown Springfield of this quality. Average 960. We're getting this for 120 a unit. 120 a unit on a 2016 built A class. I mean, you can't even build it for that. You got to build it for like 180 these days. A great walking distance to Missouri State, the bars. And then I want you to remember this. There's another picture coming on the next slide. But just remember this picture of the interior. Go ahead, Nick. All right. So this is not capturing the right amount of rents because it's a little bit underwhelming when you get inside. It's Formica countertops. They look okay. And now it's about 6 years old and the sinks are a little tired. So you got your stainless steel and all that. It doesn't do the trick for its location. It's got a boutique feel. It's got a great exterior. The spaciousness is awesome. You walk in and it's a little bit like, so what we're going to do is we're actually putting money in. We're going to make it quartz undermount sinks, better lighting package because you got like real shitty, sorry, I said I was going to curse, but I'm cursing, real shitty laboratory lights that you walk in and it's just like, why do I feel like I'm in class? Like dissecting frogs. So like we're going to get better pendant lights. They cost a lot. Like it costs a lot for pendant lights. So and then we're doing a digital thermostat to make it a little more sexy feel to it, new school. And it's going to bring in the pop and we're going to get those rents because I'm telling you, you walk in and it feels like whatever. And then also this brown over here that you see in front of the island, that looks like crap. So we're going to do something with that. We haven't decided exactly the treatment yet because we got to figure out our quartz look here, but we're going to make that look sexy. That looks like poop.
You know, Chris, not for nothing. It sounds like you've been hanging out with Chelsea Garber a little bit, you know, getting some advice.
We're probably go to her and get ideas on some of this stuff. But we have a great list of everything that we're going to do. It's like we have a list of everything we wanted to do. And then it was like, okay, we're getting a little crazy. Like you don't need to go that crazy on this stuff. Also like the upside, guys, it's I mean, Springfield right now has year-over-year rent growth of approximately mid-5s. And we've seen at our other properties that are in Springfield a year-over-year rent increase of 9. So we're going to get ourselves to what we feel is market for the upgrades that we're putting in, get that sexiness in. You know, people come into this place that's sought after. They're going to walk through the breezeways. They're going to walk through the door and they're going to love it. And then they're going to pay, as opposed to walking through, setting a high rent and being underwhelmed. And then they're shopping. That's not what we're going to do. We're going to be the best place around here. And the best places have 200 plus like over what they're getting right now. In fact, they're about 350 to 4, so we're under that. We just want about 200 pop to do all this. It's going to work. Go ahead, Nick. All right. So Springfield's about 2 hours south of Kansas City, which is a fantastic market. We have a little over 700 units there. We have our self-management team. It's kicking ass, taking names. And 2 years ago, we started looking into Springfield. It's a tertiary market, but it's growing. And in Missouri, actually, so Christian County is just south of Springfield, and that is the second fastest growing county in Missouri. So you have Platte and Clay that are really superstar counties up in Kansas City, but Christian County is number 2, right just south of Springfield. And Greene County is in that list, which where center of Springfield is, and it's growing. I mean, it's not a small place. I mean, you got 500,000 people. You know, you have a diverse employment opportunities. It's not a one-trick pony, and it's just been really good to us. And because we're self-managing, we get to utilize our techniques for marketing. If we feel like we need to push the marketing a bit more, we have our own style of, you know, throwing a couple of tricks at it. You know, you can throw rent.com, you can throw apartments.com, you can do a mixture of both. You got Facebook marketing. You can play those against each other. You can do some Facebook and Instagram marketing. So we control it all. So you can turn on and off the levers.
One thing that we also do is I reach out to the tenants myself, and I text them and I call them and look for referrals. And Niza at the 115, she's doing such a great job of that property. Tenants are walking into hanging out in the office with her. They actually play games in the office, joke around, and she's building good relationship with the tenants, and she's, you know, getting good reviews from the tenants. Not even asking, they're giving because she's making them happy, and they're actually referring people, and referrals are the best tenants too. So we love referrals.
Yeah, I mean, we're like in the takeover of the rest of the properties. We were happy with the performance of the properties with the third-party management company that we were using. We started to see that their attention to our properties was waning. And we stepped in with Sharpline Communities and just took it over, kicked ass. And suddenly we're back and the expenses are lower and the occupancy is higher and we're getting higher rents. What a surprise. Self-management is the way. If you can do it and you can spend the time, you do have to be full-time at this to do self-management, but self-management with its control is an absolute game changer. And it allows us to feel the confidence that we can perform at the pro forma numbers that we're giving you. We feel very confident that we can achieve these.
Chris, we're actually going pretty quick just to say, so Nick, I want you to just say hello. And
sure.
Because Nick, you're Chris's nephew, and you are working your ass off with me.
Thank you.
7 days a week, man. And you're. I want people who don't know us right now. You're in York, Pennsylvania, in our 43 unit that's like 100% occupied. Tell us, let them know what you do, where you are, what's going on.
Yeah, thanks, Marco. I'm Nick Diminich. As Marco said, I'm Chris's nephew. I've been with Sharpline Equity for a few years, like 4 years now. And, we started Sharpline Communities 2 years ago. And like Chris said, it takes up most of your day in and day out time solving various issues that pop up that you're not ready for, throw your whole day off. And yeah, it's been a treat to help, grow the business from my end. And I'm in one of our properties here in Pennsylvania. Um, it's a downtown building. It's like an A class, if you will, B plus class, because it's a renovated building. But yeah, I've been here for a couple of years now, 2 years, 2.5 years, and we've kind of never had vacancies. I get to know the residents as well. I spend time with some of them outside of here. So yeah, just growing the business is great, and learning a lot from Chris and Krista and Marco every single day is the best part. So
Nick is also being humble here. He's also a part owner of Sharpline Communities because he deserved it. And he worked really hard to help create it. And one of the things that we take pride in is many third-party managers suck. Terrible, absolute filth, terrible at processing leads. Can I give any more adjectives to how the passion level I feel about third-party managers not handling your leads? This is your lifeblood. This is top line income, and third-party management lets your money come in through the form of leads, look at it, do nothing, like get stale, mold, and die. We took the opposite approach and created what we call the real-time leasing system. And it is about like real-time answering the phone with our answering service and then routing to the correct people so that you can follow up as fast as you can. And quite seriously, we can still improve upon this. But we notice a big difference when we just jump in and take the leads to the face and just tackle them and figure out how to get people into our buildings. It is an absolute game changer. You will be surprised if you hear about occupancy issues, that it's all in the speed of follow-up. And that is why we created Sharpline Communities, because we wanted to control the speed of how we do everything.
great.
So go ahead, Nick. You can go to the next one, and then we're gonna have yeah, that's it. You guys expect these wonky presentations from Sharpline Equity, but that's not how we roll.
So guys, real
We
quick,
give you the pertinent info.
this is really important. We just closed a 72 unit. It was a $5.3 million. It was a 5 point. No, we needed 4.6. I raised 5.3 million in 2 days after the Zoom on purpose, because just to make sure with people, if they didn't commit or something. This is only a $2.3 million raise. This is a small deal for Sharpline. We normally raise from $5 to $8 million. I funded 15 deals all in one day. We have a great family of investors that believe in us, and I'm very humble and grateful for them. So my number is down there. If you've met me and you're interested, you text me tonight just to show some interest. We can get you more info. And I'm going to tell you how everything proceeds from here on. If you've never met me, please text me. I'll jump on Zoom even just to meet you. I love people. I network. I'm a master at networking. I can add free value to you, give you some advice about not even about this deal. My job is to meet people and network and help people as a go-giver. So please text me on that number. What to expect now, Chris, correct me if I'm wrong. After tonight, people are going to be interested, and I'm in. There's a lot of people on the call that are already in. We already have a lot committed. 7 days from now, or give or take, we will be
just because of Thanksgiving. It will be right after Thanksgiving that we'll have the documents in the portal ready. But tomorrow I'll have the portal will be open for people to make soft commits with the presentation here, the tear sheet. There'll be a recording of the video so that you can see, and then you can make soft commits there. Nick, go back to one that's like the property. I want to bring up one thing, Marco. You made me remind me of something awesome.
Tax abatement.
This one?
Yeah, this is good right here. So a 40 unit's kind of small for us, and I hate saying it like that, but it's a great deal. 120 a unit. There's a lot of upside. It's a great deal. The reason why this is so kick-ass is because it's right in the middle of downtown Springfield, and now the other properties all come together. We have one about 7 minutes north. We have a property about 15 minutes east. And because we self-manage, we don't need to bring on like a heavy salary load just to sit here and manage the building. We have the ability to move resources around and take percentages of salary and allocate them correctly across the portfolio, benefiting all the portfolio inside of Springfield, especially this. And I forgot one really important thing though, like, guys, this thing has a 3-year tax abatement on it, because when the builder bought it 10 years ago, they leveled the structure that was there. And Springfield had an amazing incentive program to basically you pay no taxes for 10 years. So they have 3 years left of the abatement, and on a 40 unit, $5 million property, the taxes are $2,000.
Less
You broke
than
up, you broke
everybody's
up, you
house
broke
on this
up. How much
call,
is it?
obviously.
I'll repeat that. They were $2,000 for the next 3 years. Now, the calculations we're making are obviously taking into account that the taxes go up and go full active in year 4. So all the numbers are reflective of that increase, so it's performed correctly. But we're going to increase rents, and we're able to take advantage of a little bit of higher interest rates that we have right now to access the basis, what you pay for, at such a low basis, 120 right now, and able to distribute because only $2,000 in taxes. Like, that's crazy. So when I saw this is one of those things that when you're in the business for a while and you are out there hunting and you have the team to execute, when this came in and the numbers came in, we locked it up. I knew it immediately. You grab it, you have your operational efficiency with your self-management company, and we were able to strike with our debt providers that we've been like cultivating for 10 years. Our relationship, our reputation out there is able to strike and take advantage of this stuff, and we did, and this thing's a freaking killer.
So guys, I want to just restate it again, especially my mastermind people, my students understand this. Chris calls me, goes, I got a 40 unit. So I don't get too excited because I love, in my field, 100, 200, whatever. But when I said, where is it? He said it's in Springfield, right near the 72. In 2 seconds, I said, that's awesome. We're going to close this like this. The manager from the 72 can manage without causing more expenses. It's scaling the right way. So for us, even in Kansas City, Missouri, Kansas City, Kansas, if I can pick up a 50 unit, if it's near one of my buildings, absolutely. Because it's a no-brainer. We don't have to staff anymore, and it just really works well. So I was very excited when I found out where it was, because I love the other 72 units, and I can't wait to bring my daughters, who she's investing in the other 72, to visit the properties that she's invested in. So yeah. All right.
Nick, you can go to the end. If you want to start looking at some questions, hit me up.
Nick, go through the questions for him, man.
I don't look at them while I'm presenting, just because I'll get
do we have an up-to-date occupancy percentage?
Yeah, it's approximately 94.5. It's been like that for a long time.
Nice. LTV, debt details.
The debt is basically, we're getting 70 LTC. We're putting 3 Gs into this thing. It's with a loan group that we used on 2 other properties. They're fantastic. The beauty is there's no prepayment penalties at all. So we're able to refi. We'll wait till month 13, because in multifamily land, if you refi before month 13, they won't give you the refi, your proceeds that you are deserving until it's a year old. So at 13, we increase quite a bit. Because we have comps out there. You'll see that in the executive summary. I'm not going to go into too crazy detail, but the comps are way higher. I mean, we stole some of these. I mean, a 2013 built, 2023 built that we bought 15 minutes away for 127 a unit. Crazy. This one, 120 a unit with upside on super luxury in downtown. Come on. So like, we are going to increase the value, and then we will refi to agency, which we are approved guarantors of all 4 quadrants of agency debt, which is pretty rare for most sponsors. We are extremely strong guarantor group. That is something we pride ourselves at Sharpline, is that we have a vast lending network. So, and like I said, it's refining to 7%. So it's modeled with a fair amount of cushion. What else, Nick?
No other.
Well, while you're looking,
No other questions? All right, we're good. See you
so
later.
while people are looking, Andy Hub's out there, Eric Zaid, Lindsay, anybody, if you guys, any of your people have questions for me, don't mind jumping on. I love to meet people. I'll jump on and answer some questions. It's better. I'd rather do it than over here. And I know you guys, like Lindsay, I know you can answer all the questions, but if you need my help or anything, I'm here. So I'm trying to think what else.
We actually are already approved for the loan too. It's not like there's sometimes risk when loan terms can change on an offering.
Oh, Chris, this is important. I'll ask this for the people. I know when it is. When do you think with it closing is? Sometime in December, correct?
More towards the the last half of December.
And guys, you know why that's important? Because you're still getting, we're going to do a cost segregation
Yes.
study. You're going to get 80% tax benefits on the cost segregation study. Next year it's 60%. That's why you want to get into a deal this year before next year.
Very good point, Marco. I didn't bring that up. Why didn't anybody remind me about that? But thank
So
you,
you got
Marco.
me, bro. That's why I'm here.
This is, yeah, like the cost seg depreciation, bonus depreciation has started to go down. 100% for many years, which was part of the cause of multifamily frenzy. And now it's 80, and next year it will be 60. We can't give you an exact percentage of kind of the depreciation you'll get. The best I can say is with 80%, it'll be somewhere between 40 and 55% of your investment, something like that.
Trying to think what else. You can, they got my number. You can stop share, Nick. You could say,
I mean, this one will be a first come, first serve because it's so small of an equity raise. But yeah, don't dilly dally on this one. You haven't heard me say that on any of the raises. I'm just saying on this one, you sign, you wire. I'm just saying. It's this is gonna be the holiday season. We can't be chasing people. I'm just telling you. We have a lot of great investors that have been with us for a long time. They trust Sharpline. They understand our thesis of why this is a great investment. Sign and wire. You will be keeping constant communication with us. This one's going to go fast for sure.
so minimum investment I saw pop up. All my doctors, friends, usually I have them put 100K and above. What's the minimum investment, Chris, in this one? 75?
I mean, we like it to be 75, but it is 50, but we have so many commitments at much higher than that
Yeah.
there'll be limited spots at 50.
Yeah, so we could do some spots at 50 because we do get a lot of 200, 300 thousand investors. So, which is really good. My main investors that I bring in are usually from 200 to 500. So we will allow I usually say 75, but we will allow some 50,000.
Oh, and it has been inspected already. Our builder has been there. We have an inspection group that we hire outside. We use a third-party inspection, but we do have our guy that's been with us for 3 years now. He's built over 1,000 units himself, and he has headed over $7 million of rehab for us. And he's hit every single one of the properties as our like team inspector. So he was there, and everything got a thumbs up. I mean, it's an A class. You can still mess up an A class, trust me. We definitely have seen some A classes that are a piece of crap. So you got to know what you're doing.
It's the market. I mean, we love Springfield, we love Kansas City, KCK, KCMO. I'm not going to go into all that. It's very confusing until I finally learned it and became a Kansas City person.
What else? Anybody else got questions, Nick? Or no, that's it.
That's it.
Whoa, we kept it under an hour. We're getting good at this.
Told you. Well, this is like I don't like calling it a boring deal. This is to me it's an easy deal. It's not like a C class with a $2.5 million capex, and this I showed my kids. Like I was so proud to show my daughter their dad is buying this beautiful building. Because actually, my daughter sees some of the C classes that we own C, B, and A, and she sees some of the C classes. And she's like, "Whoa!" And I'm like, "But whoa equals a lot of money when you put in the business plan." I explained to her. I said, "I'm going to make this much money on that C class, little risky investment, And she goes, "Oh, okay." And but then I show her the A classes, and my 9-year-old is in a nice A class in Orlando where she's going to college. So it's nice to show her that dad's buying some awesome buildings.
An A class with upside for 40%, probably less than replacement value with a 3-year tax abatement. Come on, let's go.
So I just want to thank everybody for coming. I see a lot of great faces here from Mastermind, investors, our family. For people who don't know me out there, to the people that know me, I really build relationships. I do nothing fast. Sunil on here, Dr. Gupta, started out 25 years ago, a friend, and invested a deal or two. He's my partner on 18 deals now. So I'm very careful and on building relationships, and I value these relationships. So yeah, I just want to thank everybody for coming. Any questions? Like I said, my number is there. You have a question, text me. Even if you're not investing, I will answer, because that's what I do. So
Marco, that's a good point. If this deal for some reason is not for you, I really encourage everybody to start getting to know any of the principles of Sharpline, because in 2024, Sharpline is out there and is getting some of the first looks at some fantastic opportunities, and we are poised to strike. So if you are not in the know with us, you better get in the know with us, because it's going to happen fast and we're going to strike. This one happened fast and we struck.
So Chris, I want to end with this. This is important. It's like a little lesson. So we had some time. Now we're going to teach this lesson. The mastermind in 2020, I have a mantra for my mastermind every year. It was the year of COVID, protecting our families. That's what my students were doing. We were protecting our families. 2021 was the year of operations. The year diversification, everything, crypto, everything, year of diversification. 2022 was all in, and I say all fucking in. It was all in. We were finding great deals. We had connected. It was all in the mastermind. 2023 is a year of operations, and that's what we did. And 2024 is a year of liquidation. There's already 600 units in Tennessee, Knoxville. My brother's going to be purchasing. They're liquidating.
I can't argue with Marco's moniker on that one. That's pretty fucking good. Yeah, the year of liquidation is.
Yeah, so I just came up with that. I'm thinking of the mantra right now for my mastermind. It's a year. Well, not just that. It's a year of opportunities, but opportunities for professionals and educated people, students for life that are in my mastermind. The year of liquidation is happening, and Sunil, I talk to Sunil Gupta all the time, my buddy, and we talk about economies. And it's not. 24 is going to start, but millionaires are made in a down market, and we're going to see 24, 25, 26. The people that are present are going to find these opportunities. And you got to dig hard from them, and you got to be careful, and you got to be around educated people, as I teach in my mastermind. And that's what we're doing next year. We're going to start looking for the opportunities. By the way, guys, I don't need to buy deals. I'm done. But when Chris brings a deal and I look at it, I'm like, this is a deal. So I don't need to. There's people out there pushing for deals. I don't push. I wait till they come to me and they're at a good price. So that's what I'm excited about next year, is getting deals that make sense even more. And then in 25 also. So that's something exciting.
If you don't follow me online, I'm about to post something, a graphic. Sharpline is in markets where year-over-year rent growth, effective rent growth, organic rent growth is still rising. And it has all the markers of the demographics to continue in that way. And you're going to see, in comparison to some of the markets where everybody was running to, declaring victory, some of you are in those markets in some deals and not doing too well. And they have extreme negative rent growth. Sharpline kicks ass at picking markets. That is one area you will hear us be super, super confident about. We know markets. So we left Atlanta before it crapped itself. And I know I just made some people really angry about that, but we left at the right time. Negative rent growth right now in Atlanta. You better be right in Atlanta when you go and pick your areas in Atlanta. You better be right, or else this is going to get gross.
So one last thing, I'm going to give one tip of the day over here for everybody. if you don't know us and you're looking to invest and you want to get to know us, like Chris just said, Chris said it. Follow me on Facebook. Follow Chris on Facebook. Send me a friend request, but text me because I don't accept people usually. I'm close to 5,000. But I want you to see my tips of the day as a go-giver. I keep giving tips on everything, on the self-management, on everything we do. I want you to see the charts and graphs Chris puts up, the knowledge behind it, the ethic, the work ethic we're putting in, day out, 7 days a week. I work more on Saturday and Sunday with this, putting out content and than I do during the week. So please follow me on Facebook. We put out some really great stuff for my mastermind, for my families, and for my students. So in saying that, Krista, you guys have anything to say? We're good to go.
We're good to go. I'm excited to wrap this one up. This one's a good one.
Yeah,
Good.
for sure.
Great stuff.
This one's a good one.
Yeah,
Love
Love
thanks,
the
everybody.
A
Like,
properties, guys. As someone who's like in the weeds when it comes to operations, when Chris brings an A property to us, I'm like, let's go.
All right.
A with upside. I mean,
yeah, sure.
that's the key, obviously, with upside.
And thanks to all the Sharpline investors. Like, we have so many repeat investors that believe in our thesis and in just market strategy, but also in the way we operate and execute. They've been through it with us while they trust us to self-manage. You know, some people self-manage and suck at it. We self-manage and do pretty good at it. We can do even better. Like, every day we push it. So we thank you.
Yeah. All right. That's it. I just and on that note, thank you guys. Have a great night. Carlos, I'll
Thank
see
you.
you for
Appreciate
lunch.
it.
Thank you,
Sunil,
everyone.
you owe me some good wine, Sunil. I appreciate
Good
you.
night. Good night.
Good night.
Thanks, guys. Take care.
Thank you, Sharpline. Thank you.
Thank you, guys.
Bye, everyone.
Thanks. Good night.